Good morning, fellow option traders. This is Jeff, and this is the daily scan for Thursday, March 21st, 2013. Looking at yesterday, it was kind of an interesting day. I wanted to show you a snapshot of the Profit Tent portfolio about midday. This was at 11:45 a.m. yesterday, and with the market, being up like a Dow up 50. And the S&P up 7, up less than 1%, about 0.5% across the board. We're collecting some money yesterday, and at midday it was at $79.50, and it was showing 207.50 for a total. And if we look at the way it ended up, it ended up at 207, just missing that 50 cents. So it's creeping up as time marches on, and with the market, just kind of like inching higher, and today possibly opening flat or maybe down a bit. We'll just keep collecting on the Profit Tent portfolio. So it's working great. Overall, let's take a look at the spread account quick. It may not be that quick. First of all, yesterday I did enter a Google spread, and I'll explain what I did here. I was looking at the weekly chart and noticing that the stochastic is giving me a new wave down, and momentum is starting to leave the stock, which is kind of obvious if you look at a daily chart. It appears to be running out of gas. So based on what I was seeing on the weekly chart, I entered a bear call spread with a March 5, which is the last Friday in March, expiration. Now, whether I gave this enough time to develop or not, we'll find out. The other part about this particular spread was, for that expiration period, the strikes were $10 apart rather than $5 apart. So there's a little bit of additional risk introduced into this particular play, but I still collected $4.55 for a $10 spread, so I'm pretty happy with that. So what we're looking at here is basically almost a 1-to-1 risk-reward ratio if we were to take a look at it. Let me jump back to the chart here so I can get these in sync. So we can take a look at it on the Analyze tab. Alright, we have $1,000 in risk and 900. Well, that's not right, because I don't think that I really did that. I think I have, yeah. There we go. It's $544. That's include transaction costs. $545 in risk and $455 in reward, which is nearly a 1-to-1 risk reward on that particular one. So again, just to say that I was looking at the weekly. I'm seeing momentum leaving. I expect to get a magenta dot here on the average, and we are expecting over the next week and a half to March 5th, or the last Friday in March, over the next week and a half, for this to drop below this 810 level. The other trade that I put on yesterday was for NFLX, and that also is a bear call. And looking at the NFLX chart here, there, that was a lower delta which gave me something a little bit further out of the money. I was looking at 200 because at the time, and we'll take a look at it here, at the time I was getting a delta. Let's look at April here. I was getting a delta of looking at a delta of 20, and I wasn't collecting enough. I didn't think I was collecting enough credit on the trade. So I looked back at the chart and said, all right, what's the high? The high is 197, and it only stayed there for 2 days. So I picked this 195 as my short strike, and I was again looking at the weekly chart, seeing the stochastic roll over here and seeing momentum leaving the stock and thinking that it's going to come back and it's going to settle down in the range that it's trading in right now, which is around 185. So looking at the risk profile on that, we have about two of them. So we have $1,500 in risk and $462 in reward. So that's like a risk reward to roughly 3 to 1, and that's not bad for a not at the money type trade. So those are the two that I entered yesterday. All right, let's go back to monitor. Chipotle made a nice move in my favor yesterday, and I like to thank them for that, and like to thank all those buyers out there for that. And definitely a possibility of exiting that one today, because we are sitting at a $112 profit, and it's probably today, as gamma affects the trades as we get closer to expiration. This white line I expect to start moving much closer. As a matter of fact, we could take a look at where it might be tomorrow based on the current price. And if the price stays the same, we'd only make like another $21, so it's not really worth it to stay in it. So I'm making a note to check this later today and possibly exit early on that. Take my money and run, I guess you could say. All right, I wanted also to take a look at today's announcements. Jobless claims at 8:30, existing home sales at 10, and the Philly Fed survey at 10 also. Yesterday, Uncle Ben spoke, and they talked about what happened in their meeting. And here's something that I would just like to point out to everybody, and that's this paragraph right here. This paragraph right here. To support a stronger economic recovery, blah, 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 they are going to continue to print money in order to buy mortgage-backed securities at a pace of $40 billion per month, and long-term treasury securities at a pace of $45 billion a month. So, in effect, they are printing $85 billion in new money to buy these securities and buy the treasury notes. So, we're basically financing our own debt. Just a word of caution to everybody out there. I'm not saying anything. Just saying that I don't think it's a good thing, and I'm not an economist. I'm just a, stay-at-home option trader. But this worries me a lot for the future, which gives me a very bearish edge to my thinking, and that's probably not a good thing, because I should be just looking at what's happening today. But it makes me worry a little bit. Okay, let's go back, and there's not really a lot to run through on the A+ list. I am not going to cover anything that I currently have open, just to save a little bit of time. Oh, here we go again. Every time, well, I don't know if it's every time I click on Apple or not, but I'll restart it later. Okay, Apple. We have an entry here on Apple. So it looks like there is some hope here that it was going to continue up. There's this website called AAPL and he was saying that Apple is going to be moving up. Well, the reality of the situation here is that it ran up to about this 50 moving average here, and it looks like it's going to act as a point of resistance. We have a hook down on a stochastic, a move down on short-term momentum. Long-term momentum is inching up, but this is really pretty low here. A MACD at 26. That's a pretty low MACD. So I could see where it would, sort of show some sort of shift to the upward side, but short term we're definitely looking down. So I'm going to be looking for a trade here below yesterday's low, if we move below yesterday's low. So I'm setting an alert, and that will be probably an at the money bear call for next Friday's expiration if I get the alert today. So that would be at or below. So we'll be watching for that today. So we have one new alert for today. Alright, Amazon we're in, Baidu, CF, Chipotle, Google we're in, MasterCard we're in, but I want to look at MasterCard. Anyway, we're in with a Iron Condor on MasterCard, but I wanted to look to see what's going on here. And sure enough, we have a hook up, a nice hook up here on stochastic, a move up on short-term momentum. Long-term is still down because it's really kind of flat here, but I would be looking for a 20 delta on this particular trade. So I'm going to put an alert on this one right about here, and we'll be looking at or above 518, and for that one, as I mentioned, be looking at a 20 delta bull put. Alright, and Netflix we're in, and this isn't the A+ list. Panera we're in. Let's take a look at Priceline. We didn't get our alert. I think it's I don't know. Priceline is still valid, so I'm just going to move this down. Move it down to about here. We'll still be looking for that. And I'd be doing a 20 delta on that too, because Priceline just kind of scares me a little bit at times. So I wouldn't be doing necessarily an at the money bull put here. I would be doing a 20 delta bull put, and maybe an expiration out a little bit more than a week from tomorrow. And Panera, that's it. I'm in everything else, and I'm happy where I'm at. I don't want to get too overextended on the spread account. So I just don't want to have too much stuff here to manage. So I don't want higher probability items in there. Alright, so that's it. Thanks a lot for watching. Have a great day and happy trading.